So about 13 minutes until the data comes out. So let's get on with things. Right, so this is the non-farm payrolls webinar for the April 6th, 2018. Quick synopsis of what we're going to be doing today, just looking at the data, what's expected, how the data's been doing recently, background in markets, and we'll obviously go through for a live reaction, check out the charts. So this is what we're looking at here. It's 193,000. I've seen 185,000 elsewhere. It's in that range. That's a bit of a pullback from the 313 surprise we got last month, but it's right in line with what we've been doing recently, around that 200k mark. Potentially the important number of the day will be the wage data. That's expected to come in at 0.2%, so a little speedier than the 0.1% that we got last month. So here you can see that payrolls data in a bit more detail, thanks to Forex Factory. So there's that kind of quick, big spike up we had last month. Obviously that was the best we've had in a couple of years, so that was a bit of an aberration. But in general, you can see actually we've been pretty consistently hovering around the 200k mark. So what do we learn from it coming in around 200k? I would suggest not a lot, hence the importance of the wages data. So still 0.2% is a little bit not quite firing on all cylinders, but it's about that average range that we've been experiencing. If we got to pop up to that 0.4%, I think that might surprise people like it did 3 months ago. So yeah, a bit more on that. Markets did nosedive on the wages data 3 months ago. That's kind of what tipped off the correction in equity markets. General idea being that we're waiting, that the economic growth is strong, the labour market is tight in the US, meaning that, you know, we've got this 4% unemployment. There's a certain number of people that are just realistically never going to get a job, so almost technically economists say full employment. So naturally you would expect those who are employed to be able to have a bit more power to bid up their wages, but we haven't really seen that yet, so that's what we're waiting for. There is more volatility in markets since the correction took place, so that actually is good for when you're trading data releases like this. Bit of background in currency markets. The dollar seems to be trying to carve out a bottom and maybe a top in the pound and the euro. Hasn't quite happened yet, so we're a bit range bound there. So it does mean that markets can fly in either direction. The overall focus obviously at markets at the moment is the trade war. Although interestingly today we've seen the rhetoric ratcheted up again from the US, but actually markets seem quite sanguine about it. That may be in part because they're waiting for this data release, and also Jerome Powell, the Fed chair, speaks later on today, which could maybe impair the way people react to this. So the data could fly in one direction and maybe come back again later, depending on what Powell says, or maybe the reaction is more muted because we haven't got the full picture until we know what Powell says. So keep that in mind. All right, let's jump through to the trading platform. So starting off, well, I've got dollar yen on the screen. So you can see this is the daily chart. We've had a bit of a pop higher in dollar yen, so potentially a bit of a shift in trend here, but actually we've still been putting in mostly lower lows and then just a higher low here and now a higher high. So definitely more of a correction than we've seen recently. We're obviously above this 50-day moving average as well, so a bit of strength showing itself here in the dollar. The hurdle we have to get through really is around here. It's around that kind of 107.70 up to about 108, I suppose, is a bit of a line in the sand for this trading range here. So if we do get a continued pop in dollar yen, watch out for this 108 level, because that is still resistance from this high here, and it could easily cap the top of this trading range and send prices lower again despite this trend line break and the moving average break. So if we dig down onto these smaller time frames, maybe the 1 hour chart, you can see that we're trending higher at the moment. But we're kind of stalling out as you would expect ahead of non-farm payrolls at those old highs. So, you know, how can we use this information? Well, we're near the highs, so, you know, if we were to kind of give up some ground from here, the next logical support would be down here at these, you know, these lows here, and it is that that high from back there. So, you know, watch out for a pullback down to that short-term moving average for possibility of a bounce back, or otherwise, you know, we're obviously just trading potentially just a break in line with the trend through these old highs here. So a pop above, either use the down sloping trend line through those highs, or maybe a bit more conservatively, you know, have yours above those highs for a continuation trade. So it's generally a good sign when you know, the market's kind of pulled back and then it's back up the highs, it's consolidating again. It's a good sign for a breakout, but you know, these data releases can be choppy, so to obviously be careful. And you know, any of these, anytime you're trading these data releases, you've got to put your stops in. But also just be aware that, you know, in volatile conditions, sometimes the exact price you want on your stop isn't going to get hit. How are we doing for time? Okay, 6 minutes to go. Oops. So let's have a quick look at the euro. This is the short-term chart. This is kind of interesting. If we do get a pullback in the dollar, and then again, just like dollar yen's trading higher, euro dollar seems to be kind of trading lower at the moment. So if you're trading along with this short-term trend, somewhere up near this moving average, which has been capturing the trend, and this down-sloping trend line, could be an interesting area just to get back involved with that short-term trend. But just be savvy that we're kind of, if I zoom in a bit here on this daily chart, you can see that we've taken out this daily chart low here, but we're still kind of struggling a little bit with it. But then we've got this low back for here, which you can kind of put to either here or here, that could kind of cap the downside. And then probably a bigger level would be this spike low down here, or if you want to use this low back here, it's down there. So it's at 1021.70 down to 1021.50, say, would maybe be the target to any short-term trades if this downtrend is going to continue. And if we get a pop higher, maybe that's an opportunity to sell at a higher price, so just depending on your trading style. Gold, this is the daily chart. It's been very much capped in this 1307 to 1358, shall we say, trading range. So a bit choppy, a bit hard to deal with. If we jump down to the smaller time frame chart, you can see that we're pretty much range bound here, same as we are on the longer term chart. So we've just hit this support. We've had a decent little spike off the support level. So that points quite well to a low risk entry back into the range. So if we're calling this our kind of rough price range between these two price levels, conservatively, maybe you get a pullback to the moving average again, or maybe you aim for the top of the range. If you're buying down at the bottom of the range for a sell-off in the dollar, which obviously would come if there was weak data and some gains in gold. But obviously, yeah, keep in mind that we're basically mid-trading range here, so there's still a scope for breaking that little support and then dropping down for 1307 to be a kind of logical target on the downside. Last but not least, Wall Street. So we've obviously had a decent pop over the last few days, found support at the 200-day moving average. So this is kind of mid-range again where we are right now in terms of this, you know, if you, this range here of sort of 23,300 up to maybe 25,450, we're kind of in the mid there. So, and you can see we found support a couple of times in this sort of vicinity. That this was the support before that last leg leg lower a week or so ago. So yeah, we're at a resistance level here. So the market dropped earlier in the overnight futures in response to the trade tariff news, but it's off the lows. So maybe some potential for the market to still do okay on bad news, which is always a good sign. On the shorter term chart, it's pretty choppy stuff. We're we're in a kind of trading range here, up near the top of it. So you can say based on these levels, we had a kind of break and then a false break, and now we're stalling a bit at this resistance here, or indeed that old high there. So we're pushing back into it. It depends if you think this this breakout has legs. We did get a close above that high. If we revert back to the daily chart again, the 24450, got a close above there, then we rolled right over there again. So on my judgment, that's a bit of a false breakout so far based on today's price action. So then you could maybe expect some weakness to come back in the market from this kind of vicinity, from this breakout area that didn't quite happen, somewhere from the 2345 up to the 24450. This peak here, I think somewhere in here the market could roll over again. So again, it's a matter of whether you think this trading range can hold, but it's a relatively decent risk to reward selling from the highs here. But obviously, if this little bounce that we're getting at the moment continues and we make a new high, then obviously you can see that there's been some kind of shift in the market dynamic here. We were below this moving average on the 4-hour chart. We popped up, we've tested it. We can bounce again, make new highs, and then you can feel a bit more confident about this latest leg high, getting more strength. Right, we must be pretty close now. Oh, yep, 1 minute to go. Okay, let me bring in the old news feed. Here we are. Let's see if I can do a different chart view. Oh, hold on, just disappeared at the time I needed it. Okay, there we go. So March 103K when it was consensus. Oh, wow, that's a massive disappointment. 100,000. Obviously, last month's big gains have translated into poor gains for March. So very disappointing on the headline. Unemployment rate stays at 4.1, so disappointment there. Yet hourly earnings have actually surprised to the top side with 0.3% when we were expecting that 0.2%, and 0.3 is actually quite decent, so signs of wage gain. So another mixed report. Last time we had a mixed report, it was actually the opposite way around. We had good headline jobs numbers and weaker wage growth. The market reacted to the wage growth, to the headline that time around, because it was such a big surprise. This is quite a weak report, quite surprisingly weak, 100,000. I suspect we're going to react to the headline again initially. Let's have a look. So let's look over at the Euro chart. We'll just pull in that 15-minute chart. So we're popping to the top side. Yeah, dollar weakness. Yes, it's reacting to that headline weak number as suspected. So we're getting this pop in the euro. So we're into this territory that we talked about. So again, it's a mixed report. Keep in mind the headline number is weak, but actually we've got that strong wage growth. And we talked about the importance of wage growth for what it means for inflation. So let's eye up this area here on the into this declining trend line, into these moving averages. I think I had it on the 1-hour chart last time, didn't I? Look up, let's see how it reacts to this previous peak here, which comes in line with that 1-hour moving average. And if we get a pop above there, let's see how it does with the trend line. If you're ignoring those spike highs in the trend line could potentially even be like this through these peaks here. So a bit more aggressive for my liking. Let's have a look at gold. Presumably that's pop 2. Oh, why are you over there? Let's pull you over here. On this daily chart, looks a bit more mixed for gold. 30-minute. No, we are getting a pop off that support. So We've taken out that high, so decent for the range trade that we were talking about. A pop off the bottom of the range. We're already pretty close to that. I think M30. We were talking about a 1 hour. Oh, it's okay. So it's hit that 1 hour moving average there. I think there's still a chance for it to hit that 1340. But again, just keep in mind it's that mixed report. So initially reacted off the headline, but the question is, does this follow through? Given that we had quite decent strength on the wages. I haven't quite looked yet at the revisions, so let's see if we can get some of that. So the February and January numbers were revised. Got the revised numbers, but how are they? Yeah, okay. No. To be honest, I don't remember what the what we were talking about last month's number. I think they've been revised slightly higher last month, but I don't think that's really material, to be quite honest. So, yeah, the higher revisions to the jobs growth does slightly take the edge off the disappointment for this month. You know, you can certainly just call it an aberration. Probably the wage gains have more influence on Fed policy than just one-off weak report. Nonetheless, we are seeing some dollar weakness at the moment, and interestingly, yeah, the stocks are pulling back from that. You could read this either way for stock markets, to be honest, but it's pulling back from that level we mentioned, that kind of spike high there, plus that little low that we reached earlier. So see how we do. This is a 4-hour chart. Let's see how we're doing on the hourly. So we slumped there. We tried to push back up to the high, and we're rolling over again. This to me looks like a false break. We've had a little pullback from this soft candle, and we're rolling over again from quite a decent resistance level. So this looks a bit bearish to me at the moment. We're heading back down in Wall Street. We obviously, maybe how you could view this is that, well, we had that bad news on the tariffs, but we didn't fully react to the bad news because we still had the potential for good news from the jobs report. We've not really had particularly good news from this jobs report. It's a bit disappointing. So some potential for markets to roll over here. Okay. All plenty of food for thought. The market, it's obviously at that initial dollar reaction. We're just testing here to see whether that dollar weakness has more legs. To me, we're testing that old high in euro dollar. That's a potential opportunity there. We kind of stalled into a range, so it bounced off the low. Maybe it's going to roll over from the high. We've also got that 1 hour moving average coming in. Got that declining trend line as well, a bit above. So you've got a choice on the euro. If you were to follow the bearish trend, which seems to be in place, then you're either looking at selling at this old high or near the trend line. Possible stop losses above the trend line if you're selling earlier. But obviously we're kind of chopping around this longer term support level, which is obviously a tricky thing to sell into. Given the volatility in stock markets, that could be one of the bigger movers. We'll have to see if we can take out that low that preceded the report in the hour before the report. All right, I'm going to leave you with that, everyone. I think we're just about done for this live coverage today. Thanks a lot for attending, and good luck with trading next week. We've got a couple of interesting webinars, just the usual Monday market webinar covering the week ahead, and then on Wednesday we'll be talking about how to trade in volatile markets. So the title of that is Trading in Volatile Markets. Please feel free to register on the webinar page of LCG. Right, thank you all. Much appreciated. Jasper signing out.